Hello, welcome back to another episode of Harmonious Wealth. I am your host, Iyanna Vaughn, and we are in season three. Season three, we have been talking all about your financial reports. We started off in revenue, went through expenses, went through profit. We wrapped up last week our best friend, the balance sheet, because she's going to tell us like it is. And we went over the different aspects of your balance sheet, and that includes your assets, what you own, your liabilities, what you owe, and then your equity, what's left over. So today is kind of like a summary, and a summary is basically like how your cash flow flows through your business overall. I know that cash flow can be very mysterious to a lot of people. And I want to uncover that mystery for you during this episode. A lot of times in entrepreneurship, when we first start, we might be thinking, hey, I've made profit. Why don't I see that money, or why is it not in my bank balance? And, since we talked through the entire, like all of your reports, we want to really fine tune it and just say, okay, this is exactly why your cash on hand is not the same as your profit, because there are things that happen through your business. And I want you to understand the whole picture once we're through with this episode of how cash has been flowing through your business. Okay. I want to just kind of outline some truths for you. Profit is not your bank balance. Your business doesn't run in your revenue. It really runs on your cash flow. And, if you don't know where your money is going, you're going to have a really like a great disconnect in your finances. And you're going to get into that, just that shell of like anxiety, or like your like your avoidance that you might be feeling. This episode is not going to touch on the attachment style too much. This is going to be another objective review of cash flow in your business. And we're just going to do some investigation. Okay. Like, how do we know what's going on in our business? But before like we dig into the episode, I want to share with you my harmonious cash flow planner. And what that will do for you is help you be able to properly predict what your cash on hand should look like months down the line, based off of your revenue, your expenses, what you're paying in debt, and also what you're distributing to yourself in profit distributions. So if you want to get something like that, you can go to lovelyfinancials.com/planner to get your beautiful hands and your beautiful mind on our harmonious cash flow planner. Okay. So the first thing, we want to dial in that profit is not the same as our bank balances. So that is a big misconception, which I've stated previously. I feel like I've stated that again and again. So if you want to tell me to shut up, go ahead, say, Iyanna, shut up, girl. We know. Shut up, girl. We know. So just because we have revenue doesn't mean that it is in cash in the bank. We talked about that in the episode where we discussed the balance sheet, where your assets can include your accounts receivable. So just because you earned it doesn't mean you got it, and doesn't mean that you collected it. So, say if you're a coach and you're doing a launch and you had some people pay in full, but then you had people on payment plan. Typically, if you've created a six-figure launch, it also includes like you're putting all your payment plans together. And then you're saying, okay, cash collected was X, Y, and Z, right? So that's one aspect. And, when it comes to your expenses, that doesn't mean that it's all taken out in 1 month. We talked about that in the liabilities conversation, where we said you might have a way to like expand like how you pay your vendors in a couple of months, or you are on a payment plan for a coaching program or whatever have you, and you're paying that monthly versus expensing that and depleting your cash flow, or just kind of not well, just because we don't want to say just because you're expensing it or taking that cash out all at once that it is depleting it, but that's just an example. And then, your liabilities also play, like your overall liabilities, like your credit card, you paying that off also plays a part in your cash on hand. And this is really random. If you're watching this on YouTube, I want to share my shirt. It's like, it's quiet money. I would not dare unmirror my video because my eyebrows is just gonna look lopsided. So I ran the risk of you just seeing this backwards. Just know it says quiet money. I thought it was fitting for this episode. I'm not gonna do the other side of the video just because I like how my eyebrows look mirrored. And if you looked at it the other way, don't stare at it though, because it is kind of like, but anyway, I think it was fitting. So when we think of cash flowing in your business, you're going to start with your beginning cash balance, right? And then we're going to add in revenue, right? And then if you received a bank loan, it's going to bring in, or your line of credit is going to also bring in cash. That's all the cash that came into your business. Or if you have an investor, you're putting money into your business. Or if you're investing in your business from your personal account, that's money into your business. So we have beginning balance plus all the cash that came in minus all the cash that went out of your business. Everything that went out includes like your expenses, it includes like your salary, it includes outside of the profit and loss statement, your tax distribution if you were paying quarterly taxes or just paying off that tax debt. It also includes all the cash that went out, your profit distribution. We talked about that in this past episode when it comes to like your owner's draw, and it also includes like you paying off your credit card debt or like any debt. So that's cash coming out. So again, cash flows through your business with your beginning cash balance plus all the cash that goes into your business minus all the cash that comes out of your business, and it creates your ending cash balance. Okay. So just encompassing everything we talked about during this series of your financial reports, it all comes to one big equation when it comes to your cash flow. Okay. Now there is a form called the statement of cash flows that is kind of rarely used. When we go over the report with our clients, we do use the cash flow statement, and it shows overarching what we talked about in the formula for cash flow. And there is a term called operating cash flow, and it just typically goes over your typical cash flow activities. So the money that comes in, of course, is your revenue, and then your operating expenses, of course, that's going out. And then the adjustments can be like, say, for example, if you are getting paid from your accounts receivable, that also is included in your operating activities. Or if you earned that revenue but you didn't receive it just yet, that will be adjusted because you didn't receive that cash. Or on the other end, if you have a accounts payable where you were billed that, but the adjustment is you didn't pay it in cash. With our clients, we provide them with their statement of cash flows. This is typically not used when it comes to getting your financial reports, but it is vital so that you can understand how your cash flows through your business from your operating activities, your financing activities, and your investing activities. So typically on the cash flow statement, your investing activities is in the middle, and then your financing activities is last, and your operating is first. So operating activities includes like your revenue, right? That you earned in that particular period. And then it also includes like your operating expenses, which you incurred in that particular month. And then it has like the net of adjustments. So the adjustment can be, say you earned, that you had a 6-figure launch, you earned it, right? But there is a set amount, maybe tens of thousands, is going to be not collected in that particular month because everyone is on payment plans. It's going to decrease. The adjustment will be to decrease that activity because you did not collect it. It's in accounts receivable. Maybe that next month you may have received some of that cash from your accounts receivable, and then you're able to see the adjustment increase. So if you are looking at your finances in a cash base, you won't have all this. It'll just be very simple. The cash you collected, the cash that went out, that's your net operating activities. That might be very simple for you, right? And then the next thing would be your investing activities in cash. And the investing activities include, say, if you were to buy a computer or like office equipment, you purchasing it decreased your cash because you purchased it. But on the balance sheet, it'll increase your asset because you just bought an asset. So when we're coming back to the cash flow statement, you're able to see that when you are buying equipment or larger items, you are decreasing your cash flow, even though you purchased an asset. I hope that makes sense. And then finally, when it comes to your cash flow statement, you will be looking at your financing activities. And your financing activities is basically how you're paying off your debt. So it'll include like your credit card payment. Like, so say if your payment, because you had a launch, you want to just kind of pay off that credit card debt above and beyond like what that minimum payment was, you're going to reduce the cash, and it shows you how you reduce the cash in your business because you're paying off that credit card debt or line of credit, whatever that is. Or your credit card can save you cash because you're using it, or your line of credit can save you in cash because you're using that debt. You're leveraging that debt for expansion or like a special project or a conference, like we spoke about in the liabilities episode. The financing activities also includes what you pay yourself in distribution. Again, that can be like your tax distribution as well as your profit distribution. So financing activities again will include both debt and distribution. And then we have that net cash flow again is your all the cash that came in the business, revenue. If you were to receive like a loan and the actual cash that came into your account, a loan deposit, and that increases your cash, right? Also, if you were to invest in your business from your personal account, that increases your cash. And then all the cash that went out of your business, which includes like your expenses, your salary, your tax distribution, your profit distribution, you're paying off your liabilities. And then that creates your net cash flow. And then you'll be able to understand exactly how cash flows in your business. Okay. So, what I want you to do is take a look. So, if your balance sheet is your best friend and you're dating your profit and loss statement, your statement of cash flow is like your auntie that you see every once in a while, but it's really vital to see her because you want to make sure that everything is in line and she's giving you advice on wealth advice. Okay. Let's call your cash flow statement your auntie. You want to talk to her every single month, even if at one point you were very touch base every quarter, maybe every year, maybe you see her or not. But we want to talk to your auntie. We want to see your auntie every month. Okay. We want to look at your cash flow actually every day. There's different things that we want to do to maintain cash in our business. I'm going to create a series for cash flow, but for this episode, we're really just talking about like how cash flows in your business, specifically with the cash flow statement. So we talked about why profit is not your cash balance. We talked about the different types of cash flow and how cash really kind of flows in your business. And then we talked about the different aspects of operating activities, investing activities, and financing activities. Let's look at that cash flow statement, put me side by side, with the video. Well, if you're listening to me on a podcast or if you're watching me on YouTube, kind of put me next to your cash flow statement as we go through this. And then let me know what you come up with. If if you're watching the YouTube version, put a comment and let me know what you're going to do or what you're coming up against if you're having any issues. If you want to hit me up on a DM on Instagram, feel free to do so. And then also shameless plug, we have our monthly bookkeeping, financial strategy, and even fractional CFO services where we help our clients not only like create a seamless tax season, but we help them understand holistically the health of their business finances. We help them really create a profit plan so then that way they can create, they'll be able to pay themselves what they need, increase their profit. And if you increase your profit, we want to help you increase your cash flow. And, we help you do all that. So, shameless plug again, if you want to get in touch with us, I'll leave my link down below, and you can book a discovery call. And finally, if you're at a place where you're like, hey, Iyanna, I know I need help with my cash flow. I have our Harmonious Cash Flow Planner for you. That is for you to really have that quiet money, but it's loud on the, I don't know. I just wanted to show this again. My shirt. But go to lovelyfinancials.com/planner and you'll be able to get your beautiful hands and minds on our planner. And that helps you create a prediction for your revenue, your expenses, paying off your liabilities, as well as understanding your distributions. So if this resonated with you, please like, share, subscribe, and comment, all those different things. I would love, love, love to expand the community, and let me know what's the best, what's been most helpful for you. And then if you're listening to us on a podcast, please rate us, leave some feedback. I would love to listen to your feedback. And finally, if you're a woman and you're wanting to grow both your business and your family, and you want to release the worry with money and doubt with money, this is the community for you. Subscribe on either YouTube or anywhere you listen to podcasts. I'm on a mission to help 100 women increase and build generational wealth through getting at least a 1 million in net worth while depleting and canceling out, coming out of agreement with generational curses. If this aligns with you, I would love, love, love for you to join our community of Harmonious Wealth. Thank you, and I'll see you next time. Bye.